welcome back. It's Money Monday edition. It's bonus coverage. It's hour number 2. And Frankie had to go, but I'll be with you for the rest of the hour. And we'll be talking about what I love talking about most. It's money and the markets and the economy and all that good stuff. And, you know, as we come into this quarter past the second hour today, the Dow Jones is down 263 points. A very tumultuous, very volatile week last week. But most people have been upbeat about the markets. The macros are great. Unemployment is at 50-year lows. African-American unemployment is at all-time lows. We still have growth that's trending at 3%. When Barack Obama said that Donald Trump would need a magic wand and to get to 3%, I guess he found that wand. And they said manufacturing jobs will never come back. We see the manufacturing index is up under Donald Trump. So the macros are good. And when you have down days in the markets, the really smart people, like the contrarian investors, they go by this theory that, you know, you sell when everyone's buying and you buy when everyone is selling. And one of the most famous investors of all time had a very good tidbit of information on what to do when you're in the market, you know what you're investing in, and things go down. So if you like the stock at 10, what about when it goes to 5? Here's what Peter Lynch had to say.
What you learn from history is the market goes down. It goes down a lot. We call that a correction. That means that's a euphemism for losing a lot of money rapidly. But we call it a correction. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14, it goes to 6, that's great. You understand the company, you look at the balance sheet, and they're doing fine. And you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional.
You know, so you have guys like Peter Lynch out there who've been saying for decades now that if you've done your homework and you've made investments for the long term, you know what you shouldn't be investing in things that you don't know about, but you know what you're investing in. It's suitable for you. You've made your investment choices and positioned your portfolio well so that you're invested for the long term, for your retirement, for your future, for your legacy. There are times when the markets come down that those are called buying opportunities. And when everyone else is panicking and selling stocks because they think it's Armageddon, the smartest guys on the planet who've been doing this for a living, that's when they go in and they start doing some bargain hunting. So take some of these opportunities to take a little closer look at your portfolio. You got the market down 250 today. It's being tugged down by techs and other stocks, but overall, the market is in good shape. Our macroeconomy is great. Everyone has jobs. There are actually more jobs available in America today than people looking for jobs. So we have a little gap between what skills are available and what skills are needed. And I think Trump is taking some policies out there to try to bring all of that stuff into the fold and match up some of those people with those jobs. And, you know, going back even before Peter Lynch, and you're thinking about the markets and, ooh, we did so good for so long. Way back a couple of years ago when Donald Trump was running for office in 2016, I was one of the only people on television. I was on with Neil Cavuto. The market was at about 20,000, and I said I believed in Trump's first year the market would be at 25,000 if he got his tax cuts due and he started doing some regulation. Those things happened. The market went to 25,000. That was a great support level for the market. But somewhere in the middle there, the market actually broke through 23,000, which was amazing, and we kept breaking these all-time highs. So nothing goes straight up. It must go up and come down. Well, let's take a look at how people were feeling when the market was busting through 23,000.
It happened only 90 minutes into the trading day.
We are watching the Dow, which just hit 23,000 for the first time.
The stock market just hit an all-time record high.
Stick with your investment plan. That's the way you avoid missing out on the returns.
So that was, when you're thinking about, last week it was at 27,000, now it's at 26. Just 18 months ago, the market hit 23,000 for the first time and got as high as 27,000, another 4,000 points, or another 20% from there. So when you start thinking about the subjectivity of this, the market's down a couple of 100 points. There's a lot of geopolitical stuff happening out there, and there's a lot of volatility in the summer. Because in the summer, volumes are lower on the exchanges. People trade less. People care less, especially the last 2 weeks of August when people start to take vacations and basically wrap it up till the end of the year. As you know, last week probably every hedge fund manager worth his weight in salt was out in the Hamptons for Donald Trump's fundraiser out there at the home of Joe Farrell. And many on the left are screaming and yelling that Stephen Ross is a big donor and he's participating in this. Stephen Ross is a world-famous real estate investor, and he's apparently one of the biggest shareholders in SoulCycle. And he's on the board of directors, chairman of the board of SoulCycle. And apparently the left-wing lynch mob, today known as the liberal Twitter mob, is out there asking people to boycott SoulCycle. Now think about this. You go to SoulCycle, you don't care if they're Democrats or Republicans. You want to get a good workout in. You want to ride your bike in a room full of people that have the same kind of commitment to good fitness and health. And somehow or another, these liberal loons, these Pelosiites and others, they want to tell us that you should boycott SoulCycle because Stephen Ross supports Donald Trump's raising money in the Hamptons. It's almost bizarre. If you've ever seen me off set, you know that I'm no champion of physical fitness, so I'm boycotting SoulCycle for my own reasons. Nothing to do with Stephen Ross. I just don't want to do cardio, but I do like a good bike ride every so often. And, on a Money Monday, there's one thing I've been talking about now for a couple of months, and I want to just bring it up again. Let's take a look in at our good old friend Nike. And if you remember, with Nike, just around the 4th of July, they were coming out with the bicentennial. They were coming out with the sneakers with the Betsy Ross flag on them. And the new CEO of Nike, Colin Kaepernick, got all upset because that flag represented a time in America when there was slavery, and Nike pulled the sneakers off the shelf. Now there's this whole cult business for anyone who can get their hands on these. And I said I'd be short Nike because moms are not going to be buying as much Nike stuff for back to school. Nike was about $90 on 4th of July. And it limps into this Money Monday at $81.80, so down about 10%. And I wouldn't be surprised if that Nike continues to fall because middle-class moms and hard-working blue-collar people don't like those who hate our country. Take a quick break. We're coming back with more Liquid Lunch Money Monday after this.